All right, traders, if you just stumbled across this video, congratulations, because you have truly found the needle in the haystack within this industry. I'm about to share with you, once again, I posted a video earlier this year. This gap trading strategy will make you rich. It's a gap trading strategy where it's going to get you in before a major trend reversal, where you can buy put option contracts at the lows and get in when SPY is trading towards the highs, right? So if you're looking to get in before these major crashes, that's what this strategy is going to do for you. It's a unique trend reversal strategy, and I ended up using it today to make a very lucrative trading return on my portfolio. My portfolio was up 7.5% on the day. We had some members within Trader Society have some massive green days today. Big shout out to Han Solo's portfolio is up over 1,000% in the past week. Big shout out to Paramore's portfolio is up 42% on the day. I ended up starting a small account challenge today. I explained that to members within Trader Society over the weekend. There's going to be more information on that soon. The portfolio on that is already up 7.54%. Started the account with $3,900. Big shout out to Phillips. Ended up making a 33% return today on those market put options. Benson, 4% return on the portfolio. Nicely done. Moth recently just joined the program. He already made back the cost of Trader Society. Big shout out to him. So you guys are absolutely crushing it. Big shout out to VZ. Portfolio's up 4% on the day. With that being said, I posted a video earlier this year, and the name of that video was "This Gap Trading Strategy Will Make You Rich." It's a trend reversal strategy, and I'm going to show you how I was able to literally alert at the high, at the top, in terms of, the real-time alerts. You can see right here at 9:33 a.m., literally towards the highs, I alerted SPY put options at 388. Got in, got out, made my quick profit, and then within the SPY SPX chat, I alerted 3 more times put options on RIPS and made 20% returns on those wells. Sizing in accordingly, the portfolio is up almost 8% on the day. With that being said, I am going to explain to you on why I was doing nothing but buying put options today, why I alerted put options where I did. I'm going to walk you through everything, right? So in terms of my style of trading, my style is scalping. I don't like holding too long. Now, I do believe there are certain days, even if you are a scalper, where you get in, you get out within minutes to like 10 minutes. That's typically what I do for a quick return. And in terms of my sizing, say I put in, 10% of my portfolio into an option contract, and those contracts, those same day expirations go up 20%. In a couple of minutes, I just made a 2% return on my portfolio, and my risk on that is less than 1% in terms of where my stop loss is, right? So that's kind of my style of trading, in and out scalping. Now, I do believe, I'm a firm believer, there are certain days where you should hold, where you should, of course, lock in profits where you plan to sell in terms of scalping, but leave some size on, whether that's 50% or 33%, to ride for a bigger move, right? I do believe there are certain days where that does make sense, and today was one of those days. I didn't end up holding very long, but I did end up getting back in 4 times today for 4 wins on the SPY, multiple scalps, which were 20 to 30% gainers. So how is this possible? How are we able to get in towards the top? How can we predict a major trend reversal before it occurs? How can we prepare for this, right? So let's talk about overreactions. This is going to show you how to predict a major trend reversal before it happens, and then how to react in the confirmation. And then once you get that reaction, once you get that confirmation, how to pull the trigger, what option contracts to buy, where to start locking in profits, how to have a better perspective on when to aim for a bigger move versus when to aim for a smaller move, when to get back in, etc., etc. So let's just go over this chart on the SPY. This right here is key support. This right here, we're going to take the low of this. This is a daily chart. $389.75, right? This is the low. You can see when it cracked this, when it gapped down, huge downside potential for the micro. Within 2 days, this dropped all the way to $376. And just 3 more days after that, it hit new 52-week lows. So what does that tell me? That tells me that this was a key support level that cracked. So if SPY rips back up to that previous support level and it reacts as a resistance, then it's going to be extremely bearish, and it's going to start to trend back down for a key reversal. Now, that's just one step, right? So we're looking for overreactions. We're looking for big downside moves in a short period of time and big upside moves in a short period of time, right? Now, here's the key. The gap. You have to be able to identify the gap. This is a gap down. You could visually see that the SPY gap down here, right? So the gap was at $389.80, the previous closing price. SPY ended up opening lower than it previously closed. That means it gapped down, right? When the gap fills, once this gap fills, so when you see this massive gap down, you set a price alert. You click on create an alert, you set that price alert. Once that price alert triggers, your job is to identify if it's reacting as a reversal, if it's forming resistance, if it's struggling to break out, if it's faking out, if it's forming bearish wick, if it's forming lower highs, if it's starting to break down. And if so, it's going to start to have a gap close reversal to fill the gap below. And I remember nailing SPY puts on this day. I'm going to take you back in time and blow your mind, because on this day I nailed SPY puts, and I did it again today. I just didn't, hold too long, but overall the portfolio is doing phenomenal. I mean, 8% on the day. You compound that and you're consistent with it, the results are life-changing within just 1 year of trading. So with that being said, I'm going to go back to June 28th, right? Because you have to prepare yourself for this trade, because we're seeing a very similar move. SPY is a big downside move. SPY is a big downside move. It ramps back up towards this key gap fill level. It ramps back up towards this key gap fill level. See how there's a gap to fill right here at 388.67, the same level right here. See how it had an overreaction to the downside. See how it had an overreaction to the downside. See how it topped out at this gap right here. See how it topped out this gap right here. So our job when we see these overreactions is to identify if it's going to have a reversal, is to identify if that history is going to repeat itself, right? Where that gap fills and it has a reversal and it sells off hard. So I'm going to take you back in time and show you some tips and tricks you can use for confirmations in reactions to confirm a bearish thesis trend reversal, right? So we're going to go back all the way to June 28th. You go back, you watch my videos, you will see how consistent I am with this strategy. This is the strategy that has changed my life. That's why I posted that video earlier this year. This gap trading strategy can make you rich, because it truly can. So let's go back to June 28th. So it was right here. So this is where the gap was waiting to fill. So I'm going to put you guys on. There was a gap to fill on the daily chart towards that $388 level, right? So we know that the SPY had an overreaction to the downside, right? It had an overreaction to the downside, and then it had an overreaction to the upside, filling that gap. So it's at key resistance, and it recently had a big downside move, and we're in a bear market. So what we're going to do is we're going to wait. We're going to wait for that key gap fill level to react as a resistance level. So look at how it reacted in the pre-market. It already went under the key level in the pre-market, and then it shot back up instantly. And then you could see right here, once it starts breaking down and reacting as a resistance, forming lower highs, once you see that pre-market low turn into resistance, once you see that green to red move, right? That gap up and that green to red move, and then SPY goes red and turns the previous closing price to resistance, all confirmations to be buying puts. And this was exactly at that key gap fill level. This was exactly at this level right here with the gap to fill, with the big downside potential, with the overreaction to the downside, overreaction to the upside. The best, that's what you want. You want massive overreactions to the downside, massive overreactions to the upside. And then once those gap fills, you wait for them to identify that they're resistance levels. So what I'm showing you is this is an overreaction to the upside, and this was just at 52-week lows. If it's gonna go back up just as fast as it came back down, you wait for it to react as a resistance. On this day right here, it gapped up. It gapped up. A lot of people are thinking gap and go. It's gonna break out. It's not gonna fake out. It's gonna keep on going up to fill the next gap at 401.44. Not if it reacts bearish. If it goes green to red on the day, if it turns this key level as a resistance level, you better be bearish, because you know what's coming. History is showing you right here what's coming, right? So that's how you can kind of figure that out. And in terms of how was I able to identify it today, I was able to identify it today because it's very simple. This is very simple stuff. Look at the gap right here. I'm going to show you why I bought puts at 9:33 a.m. There was a gap to fill right here at $388.67, right? So I'm aware of how it recently reacted right here. It got to a high of 393 and it closed weak at the lows all the way to 380.50, just like it did today, except it didn't go as higher. This is where that gap is going to come in handy. The daily chart said the best price to buy puts was right here at 393. And then there was also key resistance right here at 390.64. But you need to use the gaps in the pre-market chart, because sometimes it's not going to go to that price. And those it's a gap trend reversal strategy, a gap close reversal, where the SPY fills that gap and then it has a reversal. You want to see the beauty of this strategy? This is the beauty of trading gap close reversals. If you know how to identify and confirmed that they're reacting as resistance. Right here, look at this. This line right here, this blue line, there's a gap to fill. Look at the high of day. SPY is literally at the high of day of this gap. Once you confirm that it's bearish and it reacts bearish, you play for that gap to fill below. If it fills that gap and quickly goes red and forms resistance, that means that it's super bearish and it's going to continue to drop even more to then fill the next gap. You have a gap to fill below at 377.91. This is an A1 prime setup where you see the SPY gapping up multiple times. It gapped up right here from 377.91. It gapped up right here from 385.12. It's rapidly going up, right? Overreaction. And then it fills a high gap at key resistance level. I showed you on the daily chart. It was a high gap. It previously topped out at a prior gap, major key resistance level, right? This is why you wait for the best prices. Look at this. SPY had a gap to fill right here at 378. There was no reversal here. All the chasers, all the people who didn't get the best entries, all the people who didn't follow the strategy got clapped buying puts and holding through here, right? Because it kept on gapping up and going to fill the next gap. That's why you want to wait for the best gaps, wait for the best prices. If you study the channel we've been in, and I've been saying this in all my previous videos, the best price to play for the gap close reversal is at 388.67. How is that able to determine, right? So I know the plan. I know I'm bearish. In hindsight, I'm already bearish. I already want to buy puts, but that doesn't mean I'm going to do it because I need the reaction. I need the confirmation. I can't just purely trade based off a top of the channel and, oh, it filled the gap, time to buy puts. It's not as simple as that, but the confirmations and the reactions are very simple. No indicators needed. Use the candlesticks. So what I do is I study the price action, and the price action that I like to study is very micro focused, very micro focused. So I like to study the 1 minute candles and the 5 minute candles, but I mainly use the 1 minute candles. And what I look for is I look for weakness, right? So what am I looking for? I'm looking for the SPY to react as a resistance level, right? To form lower highs, to crack some support levels when it hits that resistance level. So, I'm looking at this, right? I'm saying, okay, we got the gap to fill right here at $388.67. We already went over all the reasons why it was bearish on the daily. We had an overreaction to the upside. Right here, it filled the gap at the same level, and it had a very bearish day. As soon as it went green to red on this day, having a gap up, just like it did today, it had a gap up, and then once it went green to red, it just got demolished, closed weak at the lows, closed weak at the lows, right? All that history confirms and repeats itself. So you look for those bearish reactions, right? So I already have the bearish thesis in mind. Now, in terms of confirmations, let's talk confirmations, right? So I'm going to show you some good confirmations on how this is kind of bearish using the 1 minute chart and using the 5 minute chart. So let's study the 1 minute chart. So this red line right here, this is where the gap has been waiting to fill. Now, some of the confirmations, because I bought puts extremely early, literally at the highs, some of the confirmations were right here. They were right here. Looking at the pre-market chart. The pre-market chart gave it away. Look at SPY. It breaks above the gap with very little volume. Not a big deal. It has to react to support to go bullish and then shoot back up to the 401. If this reacts to support, you better believe it's going to start to break out and fill that gap at 401.44. And then that would be the next best level to buy puts on the SPY. If it did react to support and react bullish, you would get stopped out of puts and then rebuy the puts right here at 401.44, only if it has the bearish reaction, the confirmation that I'm going to show you, right? So anyways, look at the pre-market chart. Does this look bullish? Right here, this doesn't look bullish. It cracks the gap level. It goes above the gap level. It bounces a little bit, forms a lower high, failing to go back to the pre-market highs, and then it cracks for new lows in the pre-market all the way down to 387.50. That, my friends, is bearish. It is failing to hold the level in the pre-market. So when the market opens, what you're going to want to look for are two things. Best thing you could do is buy puts. So we got the confirmation. So I'm showing you. The confirmation was it filled the gap in the pre-market and it already started selling off, right? And there's big downside potential. Look at our big downside potential, right? This is our big downside potential. We have two big downside potentials. We have a smaller gap and we have a much wider, a much bigger gap, a more macro focused kind of hold trade, right? We have a gap to fill right here. We have a gap to fill right here. The bigger picture is for these gaps that are waiting to fill below, right? And we knew that, and we identified that it was bearish because it cracked. It cracked the level. It cracked the level. Look at the 5 minute chart. Dojis. I talk about the dojis all the time. Gray candlesticks at resistance at that gap fill level. That's a bearish trend reversal confirmation. As soon as the doji forms, it starts selling off. So if you see bearish reactions in the pre-market, what you're going to want to do is wait for the market to open. And if SPY rips back up to the pre-market highs, that's where you get in. You get in on the rips, not on the dips. There's a time to get in on the dips or potentially add on the dips. But if the market's opening and we're pushing up like this, as soon as the market opens, there's no bearish confirmation. This is a bullish pin. This is an uptrend. There's no reason to be buying puts. Now, if you want, and this is completely fine because we got the bearish confirmation, you can buy puts into the uptrend, into the strong green candles. That's what I like doing because I get the best entries on these puts. I'm buying puts literally on these green candles. That's literally what I'm doing, but I'm doing it at the resistance. I'm not doing it at the support on the green candles. I'm doing it at resistance, puts at the resistance. Once I get the confirmation, the gap filled, it cracked, bearish confirmation. Okay, am I going to go buy puts on the key breakdown? No, I'm going to buy puts when it's ramping back up in these green candles, retesting the top. How am I getting into the top? Because it's retesting the top. That's how I'm able to do it. The best entry was all displayed on the daily chart, on the pre-market, using the confirmations. You say, wow, this is bearish. It's cracking now. It's reacting as resistance. Let me buy puts it open. No, wait for it to retest the resistance. And the resistance is at this red line right here. As soon as we started retesting the resistance, I started buying puts because it's forming wicks. It's forming wicks. My risk is practically nothing. My entry is literally my risk because I time it so well and I'm getting the best entries. That's how I'm able to literally risk my entry. And if you think about it, I'm not holding too long either. I'm keeping my losses extremely small because I'm not holding too long. I'm not sizing in massively. Those are the two keys. But it also revolves around getting phenomenal entries. That's key. If you can't get a phenomenal entry, you already messed up the options trade, right? Selecting the right contracts. The contracts that I'm using are typically the closest ones to expiration, and I'm typically going with an at the money strike. So if I'm buying puts when it's at 388.50, I'm going with a 388 strike. I'm going with the strike price that is closest to at the money. That is closest to at the money, not in the money. That is closest to at the money, right? Or sometimes basically closest to in the money, right? So the strike is barely out of the money. It's like 20 cents, 50 cents out of the money when I get in. That's typically what I'm doing on the SPY. Now, with that being said, I'm doing it on the green candles. So I'm buying puts at the top on the green candles. I'm not sitting here and going, okay, we just retested the pre-market highs and this just went back down to 387. Let me go buy puts here on the dip thinking it's going to break down. Let me go buy puts here on the dip thinking it's going to break down. That's not what I'm doing in terms of especially when I'm holding. Now, I did scalp puts multiple times, but that's typically like not what I'm doing in terms of like my entries, right? Now, in terms of situations to buy puts on the key breakdown, we had that support level react. We had this, key support right here, this pre-market support. This is where it bounced off in the pre-market. This 387.80s was holding for quite some time, reacting as support, reacting as support, reacting as support, reacting as support with the wicks, with the wicks, with the wicks, with the wicks, right? It kept forming lower highs, lower highs, lower highs. And then eventually when you're seeing, this is how you can identify. This is key with the 5-minute chart. Look at this. See how your wicks, see how the bottom wicks are forming at that exact pre-market support. They're forming at that exact pre-market support. That's the bottom of the wicks, right? And then see how it bounces off of that. It's forming lower highs. That's still bearish. That's overall still bearish. It's trying to go back down to fill the gap. And if you look at the pre-market chart, when it cracks this support right here at 387.50, your next support level, there is none. There is no support. There's just a gap waiting to fill below. It's held up on thin air, right? So the point is, when you see this react as a resistance, and I learned this too, when you see this react as a resistance, then you can play puts too. You just have to understand it's a lot easier to be playing puts up here because your entry is so good than it is to be playing puts down here, because you can get faked out very, very quickly and you can get squeezed very, very quickly. You have to be like you have to be very professional and very strategic, very well understood with the strategies if you're going with key breakdowns. But it's not too big of a difference in terms of like a dollar move if you're holding these. But I'm talking about if you're scalping. If you're scalping, it's a big difference. But if you're just holding these, aiming for a bigger move, it's not a massive difference. But it does matter, especially with the option contracts. The timing matters. Everything matters. The entry, it all matters. The littlest difference can make the biggest difference with these trades, especially in terms of timing them. But I'm going to show you how to kind of determine that you can buy puts on the key breakdown now. And I did end up playing puts on the key breakdown right here. Look at this. It cracked. Right here, it cracked. It cracked. In your wick now, it did form a wick. Your wick now is lower, and the candle's high is at the previous wicks. You see that? That's bearish. This is when you know to play puts. When it cracks the wick, so I'm going to draw the wick right here. This is the wick. It cracks. The high of this candle is the low of this wick. That is bearish. Lower highs, lower highs, lower highs. Another pullback. Are you buying puts into this red candle right here? I hope not. I hope you're not buying puts right here. I hope you're either buying puts right here, or if you want a better confirmation, buy puts right here on the green candle. That is where you buy the puts. You can either buy them right here. The reason why right here is the high of these candles are now the top of these bottom wicks, which is bearish. Or if you want a more better confirmation, wait for it to go a little lower and then buy puts on the bounce. What entry on the bounce do you want to start buying the puts? As close as possible to the lows of these wicks. There you go. So puts right here or puts right here. Puts on this big red candle, puts on this big red candle. No, I showed you how to do it, guys. Puts when that low wick, previous support wick is now the high of this candle, bearish reaction. Or when it cracks, buy the puts on the bounce, not on the dip. All these people that are buying puts on these dips, I'm selling into those dips. I'm selling my scalps into those dips, right? It really all depends on how you want to trade this. You don't have to sit here and hold these option contracts. You can take a 10% position size on your account. You can scalp them within 10 minutes, make a 20%, a 30% return on the contracts, and that's a 2 to 3% return on your portfolio, and you can call it for a day. Go on any website, pull out a compound interest calculator. You'll see exactly what it is I'm talking about. 2% a day compounded is game changing. And I'm trying my best to keep the red days under 1%. And I want to keep my green days above 2%. Some days the red days are going to be a little bit bigger. Some days the green days are going to be a little bit bigger. Some days it's just going to be flat. It is what it is. But that's what I'm trying my best to really do and really push for. So that, in a sense, is the strategy. We call that a gap close reversal to fill the gap below strategy. I showed you how to use it at a resistance level. I showed you how to use it at a support, a key breakdown level. And there's different confirmations, there's different reactions, there's a lot to it. But if you continue to watch these videos, you will continue to see all of the different patterns, all of the different reactions. It's very simple. We're looking for these wicks. We're looking for these. If we're seeing bearish wicks at key resistance levels, that's bearish. If we're seeing at support these wicks forming, we're gonna wait for them to crack, and then we're going to wait for the high of those candles to turn into resistance. And then that's bearish, right? Using the 1 minute, the 5 minute chart, very quick micro in, micro out trades. But as you can see, that history repeated itself to an exact T. That history repeated itself. SPY went from 393 and it went all the way down to 380.50. And then you can see right here, it filled the gap and then it went all the way down to 380.66, right? So with that being said, those are some of the basics to the strategy. And like I said, what the strategy is, we're waiting for a stock or waiting for SPY to have a gap down and then to continue to crash to form some sort of channel, right? So this is the channel. I'm gonna show you guys. We're gonna really gonna zoom in on this so you guys understand exactly what it is that I'm talking about. I'm gonna pull up a 30-day, 5 minute. We'll do a 30-day, 10-minute chart. And this is what we're looking for. We're looking for big channels, big moves. On a day like this, though, when you see this kind of move, this is something you do want to leave some on to hold. That's the one mistake I made today, was not holding very long. But the scalps were phenomenal. In terms of timing and entries, perfect. Perfect timing, perfect entries. But this is what you want, man. Big channels, and then you want to play puts at the top of the channels and then calls at the bottom of the channels, right? That's what you want to do. And you have to use the confirmations. You have to use the reactions. You have to understand your entry is basically your stop loss. If the strategy cannot work at these levels, you have to get out. That means a major shift and reversal is coming that can really, damage an account. But the point is, we're trading at the best possible levels for a trend reversal. And when it hits, it can hit very, very big. But with my scalps, I'm not aiming for too big. I do believe there is certain days to aim bigger, to leave some on to ride, whether that's 30% of your size or 50% of size. And one way to determine, should I aim for a bigger win this day? You should, because the history says it gaps up here. It fills the gap. Once it reacts as a resistance, it fills this gap below. And then if it goes red, then it just goes a lot lower to come back down to fill this gap. Look at this. You see this pattern, guys? Man, for those of you who stay to the end of this, it's an exact repeat. Multiple gaps up. Once it goes red, fills the gap right here. And then it just sells off hard to fill the gap below. Same thing happened today, guys. Same exact thing is happening today, right? Same exact thing's happening today. It rips back up to the high of the channel, fills the gap, and then it goes back down to fill this gap that was waiting to fill below. As soon as it goes red, then boom, it's going to really get crushed and start to fill the gap below. So I'm going to show you one last confirmation on when to buy puts for a third time today. This is a third scalping opportunity. I showed you at a key breakdown here. I showed you the resistance here for the gap close reversal. I showed you the key breakdown here. Now this is a third time. This level is going to be a key breakdown level. This is going to be basically your worst key breakdown level in terms of my strategy, right? So we're still at major resistance on the daily. So what you do is you wait for it to go into the previous closing price. It's now green to red. It gapped up. It's green to red. Do you buy puts as it's crashing, as it's breaking down? No, you wait for it to bounce back up. Okay, it bounces back up. Where are we looking to buy these puts? At the previous closing price. SPY cracks the previous closing price, right? It fills the gap, it breaks down. The initial reaction is bearish because it cracked and started selling off. So when it retests the previous closing price, buy puts as soon as it retests right here, or you can wait for like the first red candle. If you want to wait for the first red candle, then fine. As long as you're getting in towards the previous closing price, that's fine. Now, I want you to understand in terms of like these key breakdown levels, like I'm not telling you to, wait for SPY to gap up and then wait for it to fill the gap. And then once it cracks this gap, right? Wait for it to go back up and then buy puts. I'm not telling you to do that every single time SPY gaps up. That's what I need you to understand. I'm telling you to do this when it's at major resistance, right? This is a key breakdown. This is a key breakdown level, right? It's not the best price to buy puts, but it's a great opportunity to buy puts, to rebuy puts, or to add to puts, right? I'm telling you to do it in this situation because of the pattern of the strategy. Look at the perspective we have here. It's at major resistance. Your resistance is at 387. It's not too far off. And look what happened here. It filled the gap. It sold off. It closed weak at the lows. And it's having the same move. Overreaction. It even pulled back right here again at 390, right? So much resistance, right? I'm telling you to do that at resistance. Now, if SPY had a little gap up right around here, let's say SPY gapped up at like 370s towards the low of this channel, and then it went red, and then it bounced back up to the previous closing price, I'm not telling you to buy puts there. No. I'm telling you to do it at the best prices on the daily. And I'm showing you how to use the daily with the intraday chart. So don't be misunderstood on what it is that I'm saying. You have to use the daily chart with these patterns and with these strategies, right? It's okay to be buying puts here when it goes green to red because it's at major resistance. It's been confirmed bearish already. And what makes it okay as well is there's a gap to fill below. There's a gap to fill below at 377.91. If that previous closing price reacts as a resistance level, then the SPY is going to start to go back down to fill this next gap below, right? So that's what I'm telling you to do. Just please don't be misunderstood on what it is that I'm teaching you. It's not as simply saying, oh, SPY had a gap up. Let's wait for it to go back down. And then when it goes back down, if it goes lower and goes red, then we're going to buy puts. It's not as simple as that. You have to understand the possibilities, the patterns, right? You see the resistance. You see what can happen. You see what can happen. You want to be playing this at the best levels possible, right? If you're not doing that, then it's got to be a super quick hit and scalp. But this is what you want to be doing, what I just shared with you here. I'm going to drop a video. The second link in the description. Gap trading strategy that will make you rich. I'm going to drop that video. It's actually the main video on my channel now on the homepage. That video can change your life. And it's going to show you I'm doing the same thing over and over again with the SPY, with the stocks. With that being said, for those of you stay to the end, you're probably wondering, well, what's the game plan from here? We just had a big move to the downside. This was a day where people could have made a fortune. Put options were up over 500% today. Some people made 10x returns on puts with SPY with SPX. It was a game-changing day. Days like these don't come around every single day. So it's time to have some perspective now and ease up on the brakes and understand when this next big move is going to occur, right? When's the next big money to be made, right? Because if it's just all made today, it's not going to be like this every day. So I want you to understand that it's not the smartest thing to just be holding puts. Now, if you have a good entry, I think it's smart. If you have a good entry, I think we're going lower. If you have a good entry and you're holding puts and you're swinging, I think you're okay, right? If you have a good entry. I'm not telling you to buy puts right now and hold. I'm not telling you to do that. But if you have a good entry, I have people who are holding puts since 387, since 388. If you have a good entry, I think you're going to be fine holding these. My target for the SPY is $377.91. Why is my target $377.91? Because how does it react when it confirms bearish at this level? Well, right here, it confirmed bearish. It went all the way down to 373. Right here, it confirms bearish. It went all the way down to 372. How long has it taken SPY to do that? 2 days after it's confirmed bearish. Today's the first day where it's confirmed bearish. So I'm thinking by Wednesday, we're going to be pretty bearish and it's going to hit 377.91. Now, this is what I'm interested in doing. And this is what I want to bring awareness to. I want you to keep in mind we're due for a reversal. Now, it's going to be a micro call reversal for a scalping opportunity, right? We just did this with puts, and there's going to be an opportunity to do it with calls this week. So this is what I want you to be aware of. SPY filled the gap right here. It topped out. It sold off hard to fill the gap below. SPY filled the gap right here. It topped out. It sold off hard, and now it's starting to fill the gap below, right? So we are on track to repeat history, and this is what history is showing. History is showing that once this gap filled, which was from 378, and we have a gap to fill right here, which is from 377.91, it went a little bit lower. It reacted as a resistance, and it had a nice drop. It went to 372.56. It had a nice drop, right? We have a ton of support at this 372 level. So I'm looking at history, and I'm saying to myself, if we're looking at this chart here, right, the SPY could see it could see a little micro bounce. I mean, there was a gap to fill at 378. This is day 2, so tomorrow's going to be day 2. Day 2, it went lower. It bombed at 378.42, and it started shooting back up into the 380s. That's what we call partial gap close reversal. I don't like playing partial gap close reversals. I like waiting for the gap to fill for it to hit the previous closing price. But the point is, it almost filled the gap, and then it had a little reversal, and then the next day it just sold off hard, right? So what we're likely going to see is a little bounce, is a little reversal towards this 378 level, right? That's what we're likely going to see. So I'd say we're going to 378s. If you have puts, I would lock in some good profits at that 378. I don't know what contracts you have, right? I don't know. I'm scalping. I'm getting in. I'm getting out. I don't know if you have an in the money expiration. I don't know your entries. I don't know what your expirations are. I don't know what your game plan is. Now, if you choose to personally hold puts past 378, I would not risk more than $383. I would not risk more than $383. And I would set your price target, if you're doing that, to 374 to 373. That's where I would set your targets, right? So it all depends on how much you're aiming for. Like I said, I don't know your entries. I don't know your contracts. There's a different game plan for different contracts and different entries, right? So it's a little black and white. I'd have to know specifically what it is that you're in on. But what I want you to understand is we're due for a gap fill. When the gap fills, we're due for a small bounce. And the high of that bounce could be to 382.50, and then we could start to see another sell-off to 373. That's if this history repeats itself. Then it could start to bottom at 373 and it rockets back up, right? So I'm just bringing some awareness in terms of some levels. So what I want you to understand is I think we're going to 378 by Wednesday. When we hit this 377.91, I think we're going to see a little micro bounce. So if it reacts as a support level, it's holding, it's forming bullish candlesticks. You can scalp a call in and out. Do not hold calls. Scalp in and out, right? Now, in terms of put thesis, if we fill this gap at 378 and it bounces, you have to understand the micro trend is going to shift to be bullish, and it's going to try to rally to 382. As long as it stays under 382, we will be on track for 372 to 373. When is 372 to 373 going to hit? When is it going to go bearish? When is it going to happen? I'll tell you when it's going to happen. Last time it happened when $380.60 reacted as a resistance level. So in terms of when it's going to happen and when things are going to get ugly, things are going to get ugly and puts are going to print when these two levels crack. When $380.54 reacts as a resistance and it cracks, SPY goes down to fill this gap. Super bearish. When this cracks, that's when 372 to 373 is going to happen. When 377.91 cracks turns to resistance, SPY is going to go super bearish. So in my opinion, speaking for calls here this week, as of now, I'm going to give you 3 levels for calls. Very quick micro bounce in and out, 377.91. A very good level right here, which is going to be 372 to 371. And your absolute best level is going to be right here. There's a gap to fill below at 365.86. You see how the SPY has a crazy reversal when it fills this gap? When's the next crazy reversal going to be for the calls? Right here, 365.86. Those are the levels. Now you have to use the reactions. You have to use the confirmations. You can't just trade purely based off of those levels. You have to use reactions, confirmations. Once you get the confirmation, once you get the reaction, once it reacts to support, wait for it to drop a little bit. Buy calls on the red candles. Once it reacts as a resistance and it starts breaking down, wait for it to pump back up a little bit and then buy puts on the green candles. Because the point I make with that confirmation is, I thought about this for a long time. And once I made this shift, what I used to do was I used to buy puts into the pullback at the resistance level. So it would fill the gap and then it would pull back and I would say, oh, there's my confirmation, time to buy puts. And then I realized it is very likely, especially this is key for SPY, not for stocks. It's good for stocks too, but I would say specifically for SPY because it moves so rapidly, so quickly. I would say, if you have a bearish reaction, so, if you want to buy a put at a resistance level, but you're waiting for a bearish reaction, that means it has to go down first. So you got the bearish reaction. It's better to give up that fear of missing out and just wait for it to bounce back up again and then buy the puts into the bullish reaction because it already reacted bearish. That's the point. The point I'm trying to make is if you're waiting for a bearish reaction and you get the bearish reaction, I don't think it's smart to buy puts at resistance into the bearish reaction. I think the better thing to do is to get your bearish reaction, and then instead of where you would be buying puts into the bearish reaction for a not as good entry, that's a huge difference, especially with same day expirations. I think it's a lot better to actually buy a put when it goes back up, when it looks bullish, because it already reacted bearish. Why would it make sense to buy the puts when it has that bearish reaction, when it's likely just going to have a little bounce before it sells off and get, like, not all the time it's going to have a little bounce, but vast majority of the time I see it has a little bounce, and then you buy puts into that little bounce and then you get a better entry, right? And if you do that, your entry is going to be a lot better, which means you can risk more than the person who's in below you. And it also means, if SPY breaks out a little bit, you can hold it a little bit because your stop hasn't been hit yet because you have a good entry. So if it fakes out, you can hold through that. But if you have a shitty entry and it retests and starts to break out, you can't hold through that fake out. You can't hold. You can't even see if it's a fake out because you already stopped out. So it just logically makes sense to me. Like, if I'm looking for a confirmation that is bearish and I get that confirmation and it's dropping, it's already confirmed that it's bearish, so why not just wait for it to bounce and buy the puts when it looks bullish? That's what, after the bearish confirmation. That's the point I'm trying to make. And then inverse, vice versa for the calls, right? So that is the key levels. That is the game plan in terms of the SPY. That's what you need to know heading into this week. I'm going to keep you updated. It's going to be a crazy week, guys. Today was a truly game-changing day. I would encourage you to watch that video. It's going to be the second link in the description. And if you do want to join Trader Society, that is going to be the first link in the description. Once you join Trader Society, you get instant lifetime access. Everything is explained in the video on the landing page. All the information is explained. If you click that link, you get instant lifetime access to the chat room, to the Discord server, to the real-time trade alerts, to the video lesson library where you get to learn the unique gap trading system, the gap trading price action strategies that I've created, how to trade both ways, how to trade options, how to trade calls, how to trade puts, risk management, position sizing, and psychology mindset training. And you also get access to live trading streams that I do at Market Open every single day. You also get access to watch list, the real-time stock analysis. You have a question, you can ask me in real time via direct message one-on-one or live on the spot during the live streams. There's so much to it. If you want to be a part of it, now would be the best time to join, because I have started a small account challenge. I've officially started my first small account challenge of 2022. It is officially started. And I'm telling you guys, this would be the best time to join. Every single day, I'm going to be showing my trades. I'm going to be showing the portfolio account balance. You will see it, whether it's win or loss, you will see it. It will all be disclosed within Trader Society, within the Discord server. If you want to grow a small account, now would be the best time to do it. This is something that I'm doing for a limited time only. Normally, I'm trading with a large account. This is going to be a situation where I'm trading for a small account. I'm going to make a separate video and explain to you guys why I'm going to be growing this small account, why I decided to do it. There's a lot of reasons behind it. But yeah, the main reason really is it's been the most requested thing within Trader Society. A lot of people want to do it, and I could still trade my larger account behind the scenes. I could still swing trade with my larger account behind the scenes, so it's not going to be affecting in terms of my income massively. But I'm doing it, to help you guys out too, because it's been the most requested thing within Trader Society, and we're on track to get over 1,000 members this year. So with that being said, I got to deliver, and that's what people want to see. They want to see a small account challenge. Now, is that going to take away some focus from the large account stuff like that? Of course it is, right? So this is like a limited time only thing in terms of me growing a small account. You get lifetime access to everything, but in terms of me growing a small account where you get to see me grow a small account live every single day, this is a limited time only thing. I'm not just going to keep restarting and keep regrowing small accounts, because in the long term, that will cost me a lot of money. So this is like a limited time legacy type of thing where I'm going to document the whole journey. I'm going to post a separate video this week explaining everything, document the progress. So with that being said, that's the first link down below in the description. I will see you guys tomorrow live at Market Open.